Yo, what's up you guys? Welcome back to another video, and in today's video we're going to do the usual weekly market breakdown, but there's also two things I want to speak about. So we're going to take a look at the dollar index, gold, and as well as Nasdaq and the Dow Jones from a technical and a fundamental perspective. We're also going to take a look at the UK100 as requested over here, and UJ and NJ. And I also want to speak to you guys about a course that I did over the weekend about with this guy, I'm not going to mention names, about how to pass a funded challenge 100%. We're all going to get into all of that right now. So without any further ado, if you are new to the channel, a sub would be appreciated, as I provide valuable educational content on a daily basis. And if you do enjoy the content, please do consider finding and smashing that thumbs up button, and let's try to get to at least 100 likes in this video as well. Now, without any further ado, my good friends, let's jump straight into the information. Firstly, we obviously know we had last week, and the way we need to structure this is we always have to look at the previous week's data and then go into the new week's data and kind of see how the one fits into the other. Last week we had the purchasing managers index, we had Powell that came through, had his word, where the FOMC or the Federal Reserve obviously had some confusing minutes about what it is that they actually wanted to do, from we're going to hike interest rates to we're not sure if we should hike interest rates anymore. We had the prelim GDP came through at 1.3, higher than the 1.1% as the Dow Jones anticipated. Unemployment claims was lower, and then the core PCE came through slightly higher there as well. Looking like a good week for the index, but all good things obviously come to an end. Now, we know that June the 1st, we obviously have the debt ceiling news, which is one of the reasons why the Nasdaq enjoyed itself on Friday, hoping that the news was going to be good, but that's another talk for the coming weeks. Next week we've got the consumer confidence, see how the people feel about the markets in the US. We've got the JOLTS job opening survey, we've got the ADP, which is the automated data processing center. We got unemployment claims again, we got the ISM PMI, we got the NFP through coming out there as well. So basically, as of Tuesday, because Monday is a public holiday, I believe, and then after that we've got some straight news coming through there as well. Article from CNBC dedicated to Friday says your stocks rallied on Friday on hopes for a debt ceiling deal. The Nasdaq notches 5th straight week of wins. Wow. I don't know how that happened, but okay. It says your stocks jump on Friday as traders grew hopeful that lawmakers will reach a deal to rise the US debt ceiling, avoiding a potentially catastrophic default. The Dow Jones was up 1%, the S&P was up 1.3%, and the Nasdaq was up 2.2%. Intel and American Express rose 5.8% and 4.1% respectively to lead the Dow higher. S&P discretionary sectors popped more than 2%, and the Nasdaq went to the moon at 2.5%. Well done. I just want to say well done to the indices, but we'll see how long that's going to last. Now that we got that out of the way, what we're going to do is we're going to look at the market based off a technical perspective firstly, right? So we're going to start with the dollar index. We're going to do the weekly and then straight into the daily. Now, obviously, the dollar index based off the weekly time frame, we can clearly see here the market had printed support, broke below support, massive liquidity week to test resistance, broke below that, came back to test it as resistance, broke above resistance, tested as support, support did not hold. The market's once again back to that level to test it as resistance. So I do expect a pullback from here to at least a 0.382 when we take our Fibonacci from the low to the high. Then this is more or less where I anticipate the market to pull back to, which is allocated right around this level over here. Now, if you drop down on the daily time frame, we can see clearly that the market had obviously had a massive bull run there yesterday, and we obviously saw some sort of reaction from the market on Friday, okay, but the market never actually came back to hit this level over here. So as a retail trader, we obviously go short term and not long term. So we are going to use this level as a pullback level in the market. Now, going into next week, I do anticipate the market now obviously to continue lower, clearly because we are stuck with this price action. But don't forget that Monday it is a public holiday, if I do remember correctly. let's see quickly. I think Monday the 27th of May, I'm not sure, which is the which is the Memorial Day, so just be mindful of that day also, please, traders. Now next up we've got gold. Now gold, obviously basic price action. If you remember, I explained to you guys that we can expect that move up from gold from where it was. Gold was obviously faced with this level, obviously never broke above that, but as long as the market's holding on to support, we can still anticipate this move to the upside. The market had obviously printed this overextended information to the left leg. From there, you normally expect a continuation to the downside. Now, the only way for gold to actually give us clearance or give us an indication of where it needs to go is obviously, as you guys know, we need a clear break out of either direction. Now, if we do expect a pullback on the DXY because of the negative correlation, I do obviously expect gold to continue higher. A break above this level will give us an inverted head and shoulders pattern, and this is considered a bullish pattern from a technical perspective. If the market does give us a break below this level, then by all means we can continue to ride that move to the downside. Next up, we've got the US 30. Now, if you remember, I did this breakdown on Friday, in the week. You can see the Dow Jones basically reacted off that level there as well. Now, if we go back to this market over here, we can obviously see now that Dow Jones has some clearance to this level over here. Now, because the market obviously had broken back above this structural level, we do anticipate a pullback and then a continuation to the upside. This level acted here as support. The market broke below support, came back, tested it as resistance did not hold. All of that resistance is once again turned support. So the best way to trade this market is to wait for the Dow Jones to basically just clip that level and then continue higher to go and test that level over there. We could potentially see this massive inverted head and shoulders pattern there as well. But I can tell you now, there's going to be a lot of volatility in the market going into next week. Next up, we've got the Nasdaq. Now, I can already tell you the Nasdaq is due for a U-turn already. Now, the reason why I say this basically is that if you look on the monthly time frame, the Nasdaq's now back to test this level of support now as resistance, right? Nothing more to say about that. The Nasdaq also printed an overextended W formation. After an overextended W formation, you normally expect a pullback to the left leg, but we're only here to speak about the correction. If you go on that weekly time frame, what do we have here? Now, from a weekly perspective, price action obviously makes a lot more sense. We had a market that had finally broken above this level here, printed a massive impulse. So after an impulse, you expect a correction. If you take your Fibonacci from the low to the high, you can see we do have a 0.382 pullback lining up perfectly with a previous level of resistance that is now turned support. Again, giving us an indication that a pullback is expected. From a daily perspective, we can obviously see that the Nasdaq is currently testing previous resistance over here. We're going to use this tool over here. We're going to get our heads in there, and we can see there that the Nasdaq has just tested previous resistance. I do expect the market to pull back from that level. I don't care. I'm not going to say I don't care what you say, but that's basically my anticipation. Now, looking at this price action, I can tell you already, the first person I do want to quickly take a look at over here is Candlestick Junkie. Says here, can you please add UK100? I see a break of support turn resistance or something like that, but let's see here. There we go. So we obviously had a market printed a massive impulse. So after an impulse, do you expect a correction? The market also broken below a very important structural level over here. This level over here acted as a level of resistance. Market broke above that, tested it as support, broke below support. All of that supports now turned resistance, broke above resistance, tested it as support. Now, I do expect the market to hit that level first. Now, we have a massive impulse. So after an impulse, you expect a correction. Now, we do have the confluence of the 61.8 that's lining up perfectly with that previous level of support that is now turned resistance. And then from there, we can obviously, again, monitor the price action and see what we can get from there. Next up, we've got Mr. Bongo Cinco. I hope I couldn't pronounce it correct. You're asking for USD JPY. Let's look at USD JPY. So this is the breakdown that I did. We still have that clearance room to the upside over there as well. So basically, what I do want to see going into next week is now, obviously, expected this market to continue higher. Because I expect a correction on gold, I do expect USD/JPY to pull back slightly before continuing higher. Or alternatively, alternatively, if you look at the Japan basket, for instance, you can see there. So basically, the Japan yen, is basically the Japan index, still has some room to fall to the downside. So unfortunately, I can't say that. So I would probably say that I do expect this market to continue higher, to hit that level over there as well. So, and the next one was NZD. NZD has been very weak, if I should say so. Next up, we've got NZD/JPY. NZD/JPY obviously printed this massive impulse. So after an impulse, you expect a correction, taking the Fibonacci from the low to the high. We can see the market had broken below this level of support, which is also lining up perfectly with this 50% Fibonacci level. So I do expect the market to continue slightly higher and then continue lower there as well. Now, another thing that I do want to speak about very quickly is that on Sunday, someone said to me, have you ever heard of this guy? Cool. So that is all for the breakdowns, right? Just to clarify that. So someone said to me on Friday, and I just want you guys' thought on this, right? So someone said to me that they have found a person that is able to pause these accounts 100% manually, like trading it manually. And I was like, okay, cool. I'm going to invest in it and see how it goes, like pay for the course and then do it. Okay, so I paid for it and I received it. Yesterday I was sitting the entire day. It was only an hour long. Okay, I paid about $750. So yesterday I was sitting and I was going through it because I'm always looking for ways to improve myself and then publish it obviously on YouTube for you guys to see. Obviously can't publish the video here, but I can explain to you guys how that was explained to me. Please let me know your comments, your thoughts about what I'm about to explain to you now, how it was said to me, because for me I just don't sit well. But let me know your thoughts about this in the comment section below, right? So I will say that you can pause the accounts 100%. Okay, now we do offer the passing of these accounts, but we obviously use systems to pass it for us, right? And if you want to know more about that, there will be a link in the description or pinned to the comment section below, right? If you are interested in getting your accounts passed. Now, but in any case, so this was said that you can done it 100% manually. Now, how this was explained to me was that, or in the video of this guy, he said that you have to buy 2 accounts, right? Now, when you buy 2 accounts, you have to buy one from FTMO and then one from my Forex funds, right? Now, if you've been in the business long time already, when you said this, I already knew where this was going to go, right? Now, you should know it and I should know it. Now, then I knew basically it was going to be a buy and sell on the other account. He then explains that you have to trade US30 once a day at 100 and you have to go with a 1-to-1 risk to reward. But then he said that you have to risk 4% per trade because you can only take the trade once. So that means that if you got an 8% target, right, phase 1 target, right, you have to do a 4 to 1% risk. No, it's basically where you risk 4% to make 4%. So I'm just gonna call it like this, 4 to 4%. I'm just making an example. I'm trying to, Then he says what you basically do is you basically, no, he said it was a 1-to-1 risk, but he says that you have to risk 4%. So basically, what you do here is you buy US30, 150 or 100 SL and 100 TP, and then on your My Forex account, if you haven't guessed it by now, it says that you must sell and then sell. Okay, say sell US30, 100, but you have to risk 4%. So if you use the risk calculator, you have to put in a 4% risk of your account. So that means if you got a 100K account, you should lose $4,000, right? But you're obviously going to win $4,000 on the one and lose $4,000 on the other one. So this is basically, it's called arbitrage or something like that, where you buy and sell. But the thing is, PROPFIRM doesn't allow you to buy and sell across accounts. You can do it on a single account, but you can't buy and sell across accounts. So in order to avoid this, you would then buy and sell on two different PROPFIRM accounts, right? So, and then you pay $750 is about 15,000, 14,000 Rand for someone to tell you that this is how you can pass an account. Now, maybe this works because according to this guy, he has got a 100% success rate doing this in people who paid for it. Now, this is a method that I saw and I thought I'd share it with you guys. If you want to use it, you can use it. According to this guy, it works 100%. Please let me know, as a trader, right? As you being a trader, what are your thoughts about this? How do you feel about having to pass an account in this way? Do you think this could work? Would you pay 14,000 for something like this? Please let me know down in the comments below, guys. I'm dying to find out. And that is it from my side. If you have any other page you want me to cover, please let me know down in the comments below. The more page you give me, the more videos I can obviously pump and can provide you guys with. And that is it from my side. Thank you for your time. And as always, cheers, videos.